Welcome back to Ricky Market Outlook, and this is for the 2nd of June 2025, first week of the month of June. All right, let's get started with last week's numbers there. Obviously, we had a look at a couple of holidays in the US as well as in the Euro. And if we take a look at what's going on last week, there's a lot of talks about tariffs and whatnot, more flip-flops coming in from Trump. Whether or not that's actually blocked by court or unblocked by court, it is kind of unknown at this point in time, but we do know that the steel tariffs, steel and aluminum imports are going to be tariffed at 50% instead of 25%. So again, this is another win from Trump, considering that he's not quite happy that journalists are calling him Taco Trump. Anyway, if we take a look at the numbers there, we've got Australian inflation number there picking up at 2.4%. This is as per expected. Interest rate decisions that came from New Zealand, that was a cut for a 25 basis points cut. FOMC meeting minutes, as we said, it's not going to be important because there's not a lot of stuff that the FOMC can do at this point in time. To the point, if we take a look at the PCE numbers, it has become, to the point it's irrelevant to the FOMC's decision at this point in time. Everything is kind of, depending on whether or not Trump's tariff is actually going to take place or is it not going to take place, right? This week, if we take a look at Monday here, we still have holidays in New Zealand, we've got holidays in China, and also for Italy there. And then if we take a look at Tuesday midnight, or that's basically still Monday, we have the as manufacturing PMIs in the US. And also we got some comments from Chair Powell as well as Ueda. I think both of this is not really going to cause a lot of impact in the market there. Powell is still going to maintain that they're not in any position or in a rush to start cutting interest rates or act on interest rate decisions at this point in time until the whole tariff situation is cleared up. Same thing with Ueda. I think he's going to hold off a little bit, but he will be a little bit more on the hawkish side, probably citing a need for an interest rate hike in Japan in 2025. All right. Other than that, we have the JOLTS job opening numbers. That's going to be midnight on Wednesday as well. Bank of Canada interest rate decision. We're not expecting, a huge cut yet. In terms of the consensus right now, if we take a look at this, it's expected to cut by 25 basis points. There are some calendars out there that states that there might actually not be an interest rate cut from Bank of Canada. So market is a little bit divided in terms of what the Canadians are going to be doing. But for the ECB, this one here, it's pretty much a guaranteed cut from the ECB. But also ECB members has been talking about this being the final cut for now, and they will pause beyond the month of June to reassess the whole global tariff situation there. The global trade in terms of how it's actually impacted by the tariff decisions there. And then, wrapping up the week, obviously we have the labor numbers from the U.S. Again, those are going to be on Friday in the U.S. We'll take a look at the NFP numbers there. If we take a look at the consensus here, we're going to be looking at the consensus coming in at 130,000. This is possible that it could change closer to the release there. But what I'm really looking at is actually the unemployment rate. I'm not quite sure if this is actually going to start impacting the May number here, which is what we're going to be looking at. But if tariff starts to trickle into the market there, that could actually be an impact on the labor market. We're just not quite sure whether or not we're actually going to see this in the month of May, June, or July, but most likely in the month of July when, if Trump doesn't extend the reciprocal tariff, then we'll see much of the bigger impact onto the labor market, which is much, much more evident in the month of July, which then means August NFP numbers and the unemployment rate numbers is actually going to be much, much more significant for the FOMC to start making the decision. So we'll see what happens here for this week. But if you take a look at the technicals here, the Aussie is actually kind of trapped, right? And the current situation in terms of the technical formation, price action is actually going to be a little bit more on the choppy side here. We're likely still going to be range bound between 65 and 63.50. And unless we break that 65 cents resistance, we're not going to go anywhere with Aussie at this point in time. The euro is currently stuck between 23 high and the 22 high. In terms of pricing, we're basically stuck between 1.1250 to 1.15. We just don't have enough momentum or that lift off for the market to test at 1.15 last week, and because of that, we might actually be losing a lot of steam at this point in time. Now, obviously, this is impacted by how Trump has been flip-flopping last week in terms of his trade decisions, and also the whole trade court blocking the tariff and the Supreme Court putting it back in place. So it does cause a lot of confusion in the market as well. So the sentiment here is a little bit flat. I think there's actually a lot more traders being sidelined in the month of May. So this one here, a little bit more on the cautious side. Sterling is probably the much stronger one here. For as long as it maintains a position above 1.34, it manages to break that 24 September of 24 high. That is at 1.3434, tested as a support last week. It needs to move quickly away from this level to the upside, and if it does manage to do that, then yeah, it can punch 1.36, and beyond that, it is actually open all the way up to 1.4. It's actually 1.4. So really depending on 1.36, 1.37, if the sterling is able to break above that. But if it falls below 1.34, then we might actually see a little bit of a pullback back down to 1.32 on the sterling here. Dollar yen is the exact opposite, not on the euro, but it's actually the exact opposite on the sterling. We had 3 other blocks to the upside. The sterling had 3 other blocks as a support to the downside. This one here is still below the Ichimoku cloud here, and again, considering that the current dollar sell-off running into the Japanese yen, the FOMC likely to maintain the interest rate at neutral or start cutting interest rates in 2025, while Bank of Japan is likely going to be hiking interest rates in 2025. It doesn't create a scenario for a carry trade to happen, okay? So we don't have that driver at this point in time, potential dollar weakness because of Trump's craziness. That could still be in play here for the dollar Japanese. And one key level to watch out for in the month of June is actually 146. As long as this level is not claimed by the market, then the trajectory remains to the downside. Right now we have support at 143. Once we break 143, we've got one more final support pretty much at 142. That's where the support one for this week is currently located. But once we break 142, it opens up all the way down to 140 and 139 on the dollar Japanese yen. The resistance, again, we're keeping an eye out for the month of June. In fact, is actually 146. Any failures to reclaim 146 means that, yes, this is likely going to be pressured lower for the dollar Japanese yen. All right. So that's pretty much it for this week. Good luck with your trades, and I'll see you soon.